After 10 years of economic expansion, the longest expansion on record, middle market companies in the United States have begun facing stiffer headwinds. The momentum for growth continues, but can the middle market sustain the pace? As 2019 ended, we began to see the answer to that question. Now, every quarter, the National Center for the Middle Market surveys 1,000 middle market leaders to produce our Middle Market Indicator, the MMI. The MMI is a pulse check for companies with annual sales between 10 million and a billion. This is the middle market. It accounts for the middle third of private sector employment and GDP. The numbers I'm about to share with you were collected in the first half of December 2019. The big story? Revenue growth, which dropped significantly in the third quarter, bounded back in the fourth. Not all the way back, but back. As you can see, in the first half of 2019, revenue growth was very high. The annualized rate was well above 8%. It swooned in the third quarter all the way down to 5.8%, but in the fourth quarter, back it came, or almost back, to 7.5%. Hiring, which last quarter was at a 4.1% annual rate, also rose, but again, not fully back to the level we had been seeing in the first half of 2019. Now, the drops we saw 3 months ago were accompanied by declining confidence in the state of the economy. They were also accompanied by some dialing back of expansion plans. Companies curtailed their budgets for entering new markets, adding to plant and equipment, introducing new products, and making acquisitions. Those have come back too. But underneath the big numbers are several others that suggest that 2020 is going to be a bit of a nail biter for middle market companies and for the economy as a whole. For example, take a look at this chart about workforce growth. 37% of companies say they'll add headcount in the year ahead, which is a number that's right in the middle of the trend we've seen for the last 2 years. Looks good. But look at this. The number of companies saying they'll reduce headcount has been rising slowly but steadily. 1% a quarter, up from 3% 2 years ago to 10% today. The implication, where talent is concerned, the middle market as a whole is thriving, but there's weakness at the bottom. There's a bunch of companies that are struggling. That strong overall revenue growth number, 7.5%, remember, was similarly driven by a significant increase in the number of companies that grew 10% or more, rather than a rising tide that lifted all boats. As you can see here, 36% grew fast, up 8 points from the quarter before. But the number of laggards stayed pretty much the same, and it's higher than it was earlier in the year or in 2018. So we have a recovery in growth and employment, but it's not as solid as it seems at first glance. There are shadows amid the brightness. And as companies look ahead into 2020, their predictions about growth are less robust than usual. Now, each quarter, we ask executives to report on last year's growth and forecast next year's. Middle market executives are characteristically cautious, and typically they lowball these projections. As you can see, a year ago, the middle market projected 5.9% growth, and it delivered 7.5%. What's worrisome here are not the absolute numbers in the forecast, but their direction. As the chart shows, there's a slow downward drift that suggests that revenue growth in the next few quarters will stay below the 8% numbers we saw in 2018 and the first half of 2019. Now, I've been describing the half-empty part of the glass, but there is a half-full part too. We track several indicators of confidence. One is overall economic confidence in the local economy, national economy, and global economies. That had been sagging, but it turned around sharply in this quarter. For example, just 76% of executives expressed confidence in the U.S. economy in the third quarter, but 83% did in Q4. Global confidence also jumped from 55% to 68%. Similarly, when asked about what they'd do if they had an extra dollar, 70% say they'd put it right to work, with information technology the most popular use for it. That 70% is just 1 point below the highest number we've ever seen for that indicator. We also see strong near-term sales forecasts, a pretty reliable number because it doesn't peer too far into the fog of the future, just 3 months. So put yourself in the position of an executive of a mid-sized company. Business is good. It's a little slower than it had been, and some of your competitors are soaring, but some of them are struggling. The trade war still rages. There's political uncertainty on top of economic uncertainty. And by the way, you're a private company. The shareholder is you. It's your money, or it's your mom, it's her money. So you don't want to lose your momentum, but you don't want to outdrive your headlights either. How would you invest your money? If it were me, I'd be cautious about investments that are big, long-term, and hard to undo. But I'd go full speed ahead with plans that are easier to adjust, to dial up or dial down, depending on how business develops. And that's exactly what we're seeing. Compared to the first half of 2019, we see less interest in things like an acquisition, or building a new factory, or entering a new international market. We also see less interest in adding significantly to the workforce. All 4 of those are hard to undo actions. But we see equal or even rising intention to introduce new products or services and expand within the US. Both of those things are things that can be begun, and then paused, or slowed, or accelerated, depending on how conditions develop. So that's the picture revealed by the fourth quarter 2019 middle market indicator. Stronger performance than we saw 3 months ago, but not as strong as the performance of the first half of the year. Restored confidence, but tempered by anxiety and uncertainty, so that investment plans are more cautious than they have been. And once again, we see that mid-sized companies, the middle market, creates the most growth and the most jobs in the US economy. It is indeed the market that moves America.